Welcome back. Another day, same story. We started off well in the green, but the Nifty has moved into the red right now. The problem pocket actually is in the broader markets. But if you're looking at the Nifty itself and asking why it's moved into the red, the Adani Group stocks, that's Adani Ports as well as Adani Enterprises from the Nifty pack, both of them have moved lower. And Divi's Laboratory as well has taken a bit of a knock, explaining why from the green terrain, the Nifty has moved well into the red as we speak. But let's get chatting with the next corporate. India Pesticides, they have received technical equivalence certification in the European Union for its newly commissioned herbicide technical product. Now, this certification will bolster the company's export revenue. To understand this and more, we're joined by Mr. Dheeraj Kumar Jain, the Chief Executive Officer at the company, who joins us. Hi, Mr. Jain. Good morning. Thanks so much for joining in. Well, with regard to this development, I had three broad questions. What's the sales potential here? Were you already exporting this to any other country? And also, is this product only for the export markets or will it be served even in the domestic market? Go ahead.
Good morning. This product is exclusively for export. It is not registered in India yet. And the major use of this product is in European Union. And this registration, what we have received in European Union, is valid for all the 28 countries of European Union. And this is a pre-emergence herbicide used for cereals and soya, etc. And it has got a very good potential. We expect to do, in our revenue terms, at least 50 to 100 crores of business per year from this. And the overall revenue we feel should be around 400 to 500 crores, the product size.
Could you give us the timeline, sir? 50 to 100 crores will be in the first year, that is in FY24.
First year, FY24, probably we could do about 50 crores. Next year, we will reach the full potential of about 100 crores.
Okay. And you said later on you're looking at a couple of 100 crores more, right? Is that from this product itself?
No, sir. We are adding new products regularly. This quarter, we have added this herbicide. Next quarter, we are adding one more insecticide to our product range. And like this, we will be continuing. And we have already lined up about 8 products we have already done since our IPO, when we promised 8 products. So 7th was this, and 8th product would be coming in the next quarter. And with this, we will be completing the promise what we have made during the IPO. And in the further, our Sandila unit as well as for our subsidiary at Hamirpur, we have lined up 8 to 10 more products in pipeline, which will be executed at different stages as we proceed along.
Mr. Jain, you mentioned 400 to 500 crores. That is from this category, is it? Just to clarify. You said that's a product size.
No, 400 to 500 crore is maybe the total market size of this product what we have launched.
Okay, out of that, you will
end up making... taking about 50 to 100 crores as our...
That makes it clear.
Yeah.
Got it. Okay. So, you're saying you're adding a lot of products and you're doing well in terms of growth on the top line, but the problem really is in the operational performance. So, I think, same time last year you had almost 33% margins. It's now dwindled down to less than 23 to 22%. And are you facing a lot of raw material price pressure? Do you think that margins will get worse before they get better? Can you give us some outlook?
Madam, actually margins last year were slightly better. But this year, because of the uncertainties in the raw material prices, there were a lot of difficulties in getting the raw material at the slightly higher price we had to buy. And all the costs would not be transferred to our customers because they also have a long-term arrangement. Though part of it we could transfer, but especially the overall energy cost as well as the inflationary cost, that we could not pass. That's why the margins are slightly lower. But we feel that we should be able to maintain these margins this year as well as in the coming year.
So when you say maintain these margins, you're looking at a range of maybe 23-24% for FY24 as well?
Yes, madam, yes.
Okay. All right. What about your guidance, sir? I'm just trying to extrapolate the numbers. And you'll end this year, I think, with the revenue number of closer to 950 crores odd. It appears, going by the run rate that you're doing. So could you tell us this year, what kind of revenue number would you do? And on that sort of a base, earlier you were guiding for, quite a large growth of close to 25% for FY24. Are you sticking to that?
We expect a growth of 25%. This year also we will be doing a 25% growth. And the coming years also we expect a 25% growth.
Okay, so 25% growth would mean what in terms of exports?
In terms of revenue. In terms of revenue.
Yes,
and
that's overall revenue.
In terms of overall revenue. Okay. And our export and domestic sales are more or less equally distributed. Exports are slightly more than 50%, and we feel they will be slightly increasing further because of this new molecule, which will be totally for export. So our revenues of export will be slightly more than the domestic revenues.
Okay, and profits and net profit of. Could you leave us with some numbers? So, say around 150 crores this year.
It would be in the same range, 22 to 24% as promised. It will be in the same range.
So, 150 odd crores this year.
Yeah.
Just under 200 crores next year. That is FY24.
The numbers, probably it will be difficult for me to tell the exact number, but percentage growth wise, we feel that we should be able to do that. And as we have done a capex of about 70 crores last year and 70 crores this year at our Sandila unit, we expect a asset turnover of about 2.5. So much revenue addition should be there next year in FY24. And a similar asset turn may be slightly lower at about 2.25 with our new subsidiary at Hamirpur.
All right. Mr. Jain, the last time you joined us, you said FY23 you will grow closer to around 30%. Are you telling us now in FY23 you'll end with a growth of closer to around 25%?
It will be in that range. An exact number is difficult for me to tell now. It will come only on 1st of next month. But it will be certainly more than 25. Yes.
More than 25. All right. And on that base, you'll grow 25% more.
Yes. Sir.
And between your categories, could you tell us how things are likely to shape up between your formulations business and the technical API? Currently, majority of it comes in from technical API. So how do you see that mix change?
Yeah, actually, we are growing both formulations as well as technical more or less at the same rate. Our mix of formulated products and technicals, they are almost 76 to 20. And rest is, we have got a small range of pharma APIs.
Okay, we'll leave it at that. Thanks a lot for joining in and all the best for the year to come. That's India Pesticides. But let's move on now and talk about the market, which is very quiet, really. Not too much happening today. Once again, another range-bound morning. But this is our special segment, Charting Trends. Rahul Sharma, Director and Head Technicals and Derivatives at JM Financial Services, joins us to decode the markets from a technical lens. Rahul, thanks a lot for joining in. First, if you can, set the tone of the interview, what do you see as the markers for the index? It's hovering around the 17,000 mark and doesn't look like there's any reason for the range to break out. But you tell us, what are the charts looking like?
Yeah, very good morning, Sonia. So it's kind of a jail kind of a situation where the markets are looking for a jailbreak, and apparently none of the bands of the so-called consolidation are being taken out. Now, clearly, markets in terms of the FI positioning have been very heavily short, but since the last 3 or 30 sessions, we've seen some kind of a breather coming back into the aggression. Now, overall, if we take a top-down approach, we have US markets on one side where a bit of a recovery, a bit of a bounce back is seen. In fact, Nasdaq has outperformed the Dow Jones by a big margin. And the way the global scenario is set up, we still continue to be one of the worst performing equity indices globally. Whether this sustains or not sustains will be the key to that will be the area of 16,800 odd. 16,800, 830 is the area where we formed the bottom a few days back. And as long as this level remains intact, which is the lower band of this current consolidation, there is a good chance that we see a recovery happening towards. We have the monthly expiry approaching. We have the financial year also closing on Friday. I think a bit of relief rally is very much on the cards in the short term. So I think short term, there is a bounce back possibility. 17,300 is an immediate target. If that level gets taken out, there is a good possibility that we head towards 17,600. But the texture of the market is still not exactly out of the woods. Yesterday, we saw a death crossover happening in the Nifty, where the 50 DMA cut the 200 DMA from top. And generally, we've seen in Indian markets such death crossovers do not act immediately, but they act over a period of time. So I think one bounce back, and post that we should again be heading for another round of downside, maybe in the coming few weeks.
Okay, all right. Hi, Rahul. Maybe oversold in the near term, but let's see how much we can bounce from here. But let's talk about equity markets in just a bit. What about gold and silver? Suddenly after a long while, everyone's focusing on gold. Gold's making fresh all-time highs. Talk of increased allocation to gold. So do you believe there's more upside there?
Yes, absolutely, Nigel. So, all that shines is actually gold and, gold and silver. Both of them have pretty robust technical setups, classic buy on dip setups. Dips are to be bought into. I think there is some more upside left in both the precious metals. In terms of percentages, I think in the short term, we could very well see another 5 to 6% upside coming in both the precious metals. And technically, we are quite positive as a research house as well on both gold and silver. As far as the other commodities are concerned, I think oil is something which is sideways. It has seen the round of downward sentiment that we saw in the coming few days, 2 weeks. I think it should be range bound. Whereas as far as the USD INR is concerned, I think that is structurally, although bullish, but in the very short term, that also continues to be sideways. So no real, apart from gold and silver, no real major trends forming in any of the currencies and commodities as we speak.
Rahul, any stock setups which look very interesting, irrespective of the overall market view, which can yield good results?
Yes, Prashant. So, in the words of Edward Mackey, the only way to reduce market risk is to stay out of the market. It is, one of those phases where volatility has taken traders, on the back seat. But there are some silver linings, some setups which are clearly standing, head and shoulders above the rest of the market. One of those sectors is capital goods. We continue to stay bullish on ABB. We continue to stay bullish on the likes of L&T and Cummins India as well as Siemens as well. So this is one sector which has regularly seen buying at key support levels, and traders have been rewarded on the long side. Apart from that, I think cement is another sector but cement is, again, you have the sector leader, Ultratech Cement, exhibiting relative strength, but the rest of the stocks are actually, still yet to find their feet. So Ultratech Cement would be a top pick from the cement pack where one can look to go on the long side. On the short side, I think clearly metals is one sector which is clearly short. Vedanta is one of our short topics, could see another 5 to 6% downside in the very short term. Mid and small cap is where the maximum pain is in terms of the selling pressure. In fact, the mid and small cap indices gave a fresh breakdown in yesterday's session, and there could be more downside to this. And this is where the majority of the retail participation is also present. So, index-wise, we may be just like 10 to 12% down from an all-time high. But in terms of the pain, we are actually into a proper bear market when it comes to mid and small cap indices. So, from the mid cap space, I think two stocks which look bearish. One is Federal Bank. It has just given a breakdown in today's session below 125. Could be headed for downside levels around 118, 115. Could be an ideal short candidate with a stop loss at 128. Another one is Ashok Leyland, which continues to be on the selling side. So, broadly, these are the pockets of the market which are sort of looking weak.
Okay. All right. So, Rahul, Federal Bank and Ashok Leyland, both those two on the charts are not looking too good. But I missed the point on the small and the mid-cap indices. Clearly that's where the pain is. How much lower can it go going by the charts? I mean, is there some support levels that you have?
Yeah, right. So the clue lies in what is happening with the Nifty 500 index vis-a-vis the S&P 500 index. So if I see the long-term charts, clearly the outperformance that India enjoyed over a long time, over about 18 months or so, that has been taken out and it is approaching a long-term support line. So my sense is maybe a few weeks here and there, maybe, it could be another last 2 weeks where we see the mid and small cap, which is the broader market sort of, exhibiting further weakness. In terms of percentage downside, in terms of levels, I think there could be another 3 to 4% kind of a slide that we can witness from these levels. But having said that, I think it is best to be, sitting on the sideline. This is not a market where, you can short anything and, that will be an ideal trade to take. But my sense is as we, approach this extremely oversold line, even on the relative charts, there is a good chance that we see a reversal happening in the broader market. So the level wise, in terms of Nifty, it could be 16,600, it could be 16,400, depending on how we negotiate the next 4 trading sessions. Post that, I think we'll have further clarity as to how are we shaping up, especially in the April series.
Okay, I just have one final question. You said Ultratech Cement, one of the stocks that you're looking at on the charts. Anything else where you see further upsides in the near to medium term and something that can perhaps buck the market trend?
Yeah, so one of the consumer names, comes to the top of our minds, which is Titan. So, this stock has been under pressure since November 22. A long-term trend line has been sort of, taken out about 2,500. And I feel that, there is a good 8 to 10% kind of an upside potential in Titan. So around 2440 is where the stock has formed an intermediate base. One can keep a stop loss below that. And I think there's a good chance that we may see 2,800 odd by the end of April within a month's time. So Titan is one name that we like. Capital Goods is another. ABB remains our top pick on the capital goods space. And along with that, Ultratech Cement, as we discussed, looks good for a robust upside in the coming few days.
All right, we leave it at that, Rahul. Thanks a lot for joining in. ABB is a stock that has had a very, very strong run, 68% higher in the last 12 months. And continues to actually, be quite resilient despite all the volatility of the market. By the way, overall, the index itself is now very, very flat. It's just some of these new age tech companies that are under pressure. So, something like a Nykaa is now losing almost 3.5–4%. So that entire pocket is not doing that great. And even pharma. So you have Divi's Labs, Apollo Hospitals, etc. that are well in the red. Let's slip into
a broader market. If we can have the advanced decline up, we were just talking about how it just crossed over, right? But it's rapidly deteriorated. So now we got 1,400. It's become suddenly 2:1 in favor of declines. There you go. That's how the picture changed in the last just 15–20 minutes of trade. So the Nifty is flat. The broader markets are, losing. I mean, it's not as if I'm looking at stocks which are down, the list of stocks which are down. It's not as if it's a very long list of big volume-led losers. But numerically, declines outnumber advances 2:1 for now. We'll take another quick break here. Manisha joins in to put the focus on the commodity space. Where is the action? Stay tuned. Coming up.
Welcome back to Corporate Radar. Well, we've talked a lot about equities, which is not doing much, by the way, just sort of consolidating. So good time to take a breather from that and talk about the commodity space. Manisha Gupta is joining in. Manisha, what's the one commodity you're tracking today?
Sonia, I'm looking at the crude oil prices. I mean, we did see $88 and then we saw a crash almost up to $70 a barrel, and we're trading at $78 a barrel right now. So $8 from the lows as well is how we are trading. 0.5% of a decline, but we still are holding around that 78. We've seen 4.5% of gains come in for the overnight market. And with that, the crude oil prices now are trading at a 3-week highs. The latest trigger for the crude prices rising is that there has been now legal disputes, which has halted 4 lakh barrels per day of exports from Ceyhan, Turkey. That leads to some supply concerns into the market. And add to that the nuclear war talk that Russian President Putin has been saying about putting static nuclear energies at Belarus is something that has been adding premium. And then apart from that, we've also had the Russian oil minister saying that the output export target cuts that they had put for the month of March, they are on those right now. So 500,000 barrels is what they had talked about. We do understand that 200,000 barrels per day is already been done in the first half of March itself. The banking sector concerns also have eased. We've seen buying return in risky assets, and that has added to some premium coming in for the crude oil prices there. The global oil trade worth $200 billion that happens, much of that relies on funds from banks. So with the banks' concerns coming in, we had seen crude prices decline quite sharply. But with that risk aversion, a risk being averted rather, we are looking at buying coming back in case of crude oil prices there. The markets also are looking at the China National Petroleum Corporation statement, which says that China's 2023 demand is expected to rise by 6.2% to 540 million tons. This is by far the largest demand expectation growth that we are seeing for this year. The prices in the meanwhile are down by nearly 10% for the first quarter of 2023. And not just crude oil prices. When you look at the month of March so far, we've seen 7.5% of decline for crude, 25% shaved off from the US natural gas, and coal prices have continued to decline, trading below $200 a ton right now, and a 9% decline coming in for that too.
Okay, thanks a lot, Manisha, for that. Well, we also want to talk a little bit more about stocks now. Hero MotoCorp is a stock on our radar. It's under a bit of pressure right now. There's a very cautious note that has come in from Kotak Institutional equities this morning, where they talk about how there's no recovery just yet in the auto space, especially in the two-wheeler space, and they maintain their reduced rating on the stock. They've cut the target price on the stock to 2,400. Now, there are 3 or 4 reasons why they're still cautious. One of them is the continued increase in the cost of ownership. Then there's weakness in rural demand, higher inflation, and concerns around El Nino that could hit the rural demand going forward as well. But the other big concern is what Honda is doing. Honda has recently launched a 100cc bike, and the entry into the entry-level segment is something that is raising question marks on whether Hero can maintain its dominance over there. Now, remember, Hero MotoCorp has also lost a lot of market share in the last couple of years. So currently, the market share in the overall domestic motorcycle segment is about less than 46%, but it used to be 53% way back in FY16. So it's fallen quite a bit. And there's a consistent decline in certain geographical pockets, whether it's southern India, Maharashtra or Bihar. So that seems to be another big concern. So all in all, 1% lower now on Hero MotoCorp post the cautious view coming in over there. But Kalyan Jewelers is the other one. There was a big block deal that took place. Actually, a large equity changed hands a while back. Vivek is here to tell us more about that. Vivek.
Well, that's right. Over 2.5% of equity changed hands as far as Kalyan Jewelers are concerned. We had alerted you earlier in the morning, where we had indicated that there was a likely block deal, and sources had indicated to us that Warburg Pincus was looking to sell 2.5% stake in the company, via the block deal. So the deal floor price was at 110 rupees a share, which is where, the large block deal actually took place. A 60-day lock-in now exists as far as further sale of shares by Warburg is concerned. Total offer size or the total deal size was almost 288 to 290 crore. And interestingly, now what actually comes into question is Warburg Pincus, which at the end of the December quarter held almost 26.36% stake in the company. Now, what is it that they do with the remainder stake? And that will continue to remain as an overhang as far as Kalyan Jewelers is concerned.
All right, thanks a lot for that. So since we are taking a look at the market, let's also look at some more stocks. The Adani Group stocks once again are taking a big knock this morning. Adani Ports, Adani Enterprises, all under pressure now as we speak. 3-4% gone over there. And that's been the problem pocket for a while. So even this month, there's been no real recovery in these stocks. At best, Adani Ports is up about 1% for the month, so may have arrested its decline. But in general, this year, these stocks are still down about 20 to 50%. So no respite, despite all the clarifications coming in from the group itself. Apart from that, on the upside, you have something like an IndusInd Bank that's doing decently well. Nestle India. Nestle, by the way, comes out with its earnings as well. It's on the 25th of this month, 25th of April. So a month from now, you have Nestle's numbers. So ahead of that, some traction that we're seeing in that name, perhaps. Let's slip into a quick break. On the other side, it's our special segment, It's the Economy. Lata will get chatting with Jitanya Kandhari of Morgan Stanley to get a sense of the global macro environment. Stay tuned.